Welcome, fellow investors, to this comprehensive guide on how to invest like Catherine D. Wood. Catherine D. Wood, the founder, CEO, and CIO of ARK Invest, is renowned for her innovative and disruptive investment strategies. In this presentation, we'll explore the key principles and strategies that have made her one of the most successful investors of our time. Let's begin by gaining a deeper understanding of Catherine D. Wood's investment philosophy and mindset. These principles serve as the foundation of her investment approach. Catherine D. Wood is a firm believer in innovation-driven investing. She places a heavy emphasis on identifying and investing in companies that are at the forefront of technological advancements. For her, innovation is not just a buzzword, it's the driving force behind her investment decisions. One of the standout characteristics of Catherine D. Wood's approach is her long-term vision. Unlike traders who focus on short-term gains, Wood takes a patient and disciplined approach to investing. She often holds onto her investments for several years, allowing them to grow and compound over time. This long-term perspective aligns with the idea that successful investing is not about quick wins, but rather about sustained growth. Wood's investment strategy is also centered around thematic investing. This means she identifies and focuses on specific themes or disruptive technologies that she believes will shape the future. Themes like artificial intelligence, genomics, and electric vehicles have been at the forefront of her investment portfolio. By concentrating on these themes, Wood aims to capitalize on future trends and technological advancements. Catherine D. Wood's investment success is not based on luck, but on rigorous research and due diligence. To replicate her approach, it's crucial to understand how she conducts her research. First and foremost, staying informed is a fundamental aspect of Wood's research process. She keeps a close eye on the latest news and developments in the industries and themes she's interested in. Whether it's reading research reports, following news articles, or staying updated on industry trends, staying informed is a continuous effort. In addition to staying informed, Wood emphasizes the importance of fundamental analysis. This involves digging deep into the financial statements, competitive positioning, and growth potential of the companies she's considering for investment. By understanding the fundamentals, she can make informed decisions about the long-term viability of a company. A key element of Wood's research process is her focus on disruptive innovation. She actively seeks out companies that are leveraging disruptive technologies to transform industries. Identifying these disruptive innovators requires a keen eye for spotting trends and understanding how they will impact traditional businesses. Diversification is a risk management technique that involves spreading your investments across different assets, sectors, or themes. The goal is to reduce the impact of a single investment's poor performance on your overall portfolio. Catherine D. Wood firmly believes in the power of diversification and incorporates it into her investment approach. One way Wood diversifies her portfolio is through theme-based diversification. She invests in a wide range of themes or sectors that she believes have high growth potential. By doing so, she mitigates the risk associated with concentrating all her investments in a single industry. If one theme experiences a downturn, the positive performance of others can help balance the overall portfolio. Global exposure is another aspect of diversification that Wood advocates for. She doesn't limit her investments to just one geographic region. Instead, she looks for opportunities worldwide. This approach allows her to tap into global innovation and growth, reducing the risk of being overly exposed to a specific country's economic performance. Asset allocation is a critical component of diversification. Catherine D. Wood strategically allocates her capital across different asset classes, such as stocks, bonds, and other investments. This balance helps ensure that her portfolio is not overly weighted in one type of asset, reducing the risk associated with asset-specific fluctuations. Now, let's explore the concept of active management, a departure from traditional passive investment strategies that Catherine D. Wood employs in her approach. Active management involves actively monitoring and adjusting your investment portfolio based on changing market conditions and evolving trends. Catherine D. Wood is a strong proponent of active management, and here's why it's an integral part of her strategy. Continuous monitoring is a fundamental aspect of active management. Wood keeps a watchful eye on her portfolio, always looking for new information and developments that could impact her investments. This proactive approach allows her to stay ahead of the curve and make informed decisions. Portfolio rebalancing is another key component of active management. Wood regularly reviews her portfolio to ensure it aligns with her desired asset allocation. If certain investments have grown disproportionately, or if market conditions have changed, she rebalances her portfolio to maintain the desired balance. Risk management is central to active management. Catherine D. Wood is not afraid to sell investments that no longer align with her investment thesis, or if the fundamentals deteriorate. She believes that cutting losses early is a crucial part of managing risk and preserving capital. Now, let's delve into the importance of adopting a long-term investing perspective, which is a hallmark of Catherine D. Wood's approach. Long-term investing is about looking beyond short-term market fluctuations and focusing on the bigger picture. Catherine D. Wood firmly believes that successful investing is a marathon, not a sprint. Here's why long-term investing is crucial in her strategy. Patience is key in long-term investing. Wood understands that markets can be volatile in the short term, but she doesn't let these fluctuations deter her. She maintains her conviction in her investment thesis and gives her investments time to grow and compound over the years. Compounding wealth is one of the primary benefits of long-term investing. By holding onto investments for an extended period, you can benefit from the compounding effect, where your initial capital grows not only through price appreciation, but also through reinvested dividends and interest. Tax efficiency is another advantage of long-term investing. Wood considers the tax implications of her investment decisions, aiming to minimize capital gains taxes by holding onto investments for more extended periods. This tax-efficient strategy helps maximize after-tax returns. Emotional discipline refers to the ability to control one's emotions and make rational investment decisions, even in the face of market volatility or external pressures. Catherine D. Wood's success is in part attributed to her ability to stay emotionally disciplined throughout her investment journey. Here are key components of emotional discipline in Wood's investment strategy. 1. Avoiding herd mentality. One of the most common pitfalls for investors is following the crowd or succumbing to herd mentality. Catherine D. Wood emphasizes the importance of not blindly following the crowd. Instead, she advocates for making informed decisions based on research and convictions, even if they go against the prevailing sentiment. 2. Staying calm. During volatility, the stock market is inherently volatile, with ups and downs. Emotional discipline entails staying calm and not panicking during market downturns. Wood understands that market fluctuations are a part of investing, and reacting emotionally can lead to poor decision-making. 3. Sticking to your strategy. Consistency in investment strategy is a hallmark of emotional discipline. Wood stays true to her long-term investment strategy, even when faced with short-term challenges or market noise. She doesn't deviate from her well-researched and thought-out approach. Now, let's dive into the core of Catherine D. Wood's investment philosophy: investing in innovation. Wood is known for her investments in companies at the forefront of disruptive innovation. Here's how you can approach investing in innovation, following her lead. 1. Identify emerging trends. To invest in innovation, you must be proactive in identifying emerging trends and technologies. Keep an eye on developments in areas like artificial intelligence, genomics, renewable energy, and other disruptive sectors. Wood often looks for technologies that have the potential to reshape entire industries. 2. High conviction. Wood doesn't just dip her toes in innovation, she invests with high conviction. When she believes in a company's potential to lead in its respective field, she allocates a significant portion of her portfolio to it. This high conviction approach allows her to benefit more substantially from the success of innovative companies. 3. Understand risk tolerance. Investing in innovation often comes with higher risk, as not all companies in the space will succeed. It's essential to assess your risk tolerance and allocate capital accordingly. While the potential rewards can be significant, it's important to be aware of the associated risks. To illustrate the effectiveness of Catherine D. Wood's investment approach, let's take a look at a few case studies of companies she has invested in. 1. Tesla, TSLA. Wood's early and strong conviction in Tesla has paid off immensely as the electric vehicle market has expanded. She recognized the potential for Tesla to disrupt the automotive industry and allocated a significant portion of her portfolio to the company. 2. CRISPR Therapeutics, CRSP. Wood saw the potential of gene editing technology and invested in CRISPR Therapeutics. This innovative company is at the forefront of genetic medicine with the potential to transform healthcare.